Good evening, everyone. The date is 23rd July. One day to expiry for the Nifty options. Obviously, we are not concentrating on Sensex today. So today morning when the market started off, now I'm going to do this fast because by now you know what are the rules, how the indicators are to be used and stuff. So I'm going to mark the points which you need to watch. So this is today 9:15 a.m. Our initial strike for our strangle was 25,200 and 25,100. Now what you will see today is how the strike selection is so important that one particular strike on a strangle does not give you money, and just 50 points away another strangle, if you pick up correctly, the whole day it will never touch your stop loss and it will continuously decay and give you money, right? I'm just going to show that. So the first strike which we had was 25,200 and 25,100. Now this is your early morning high IV zone. There's a sell signal out here, but as of now I will ask you to ignore this. We will wait till this bar happens. That is, IV comes out of the high IV zone on this bar and your color of the bar has also turned red. IV has been sloping down. This blue means this is entering a normal regime kind of thing. So if it happens here, next bar opening, I sell this particular strangle, which is around 80 bucks. If you see on your right hand side, watch here. So if I sell this out here, it is around 80 bucks. Okay. What is my stop loss? My stop loss is somewhere around 90. So from there, the strangle decays up to 69, jumps up. As I told you yesterday, wait for the price to close above the stop loss. This is the bar where it happens. It closes above the stop loss. Next bar at 75, I square off my trade. So this trade, I shorted at 80, I squared off at 75, 5 rupees was in my pocket. It was not a loss trade. The stop loss which got triggered was a trailing stop, correct? Now obviously if I see this chart, you see there is no sell signal out here because the price is quoting above the stop loss line. Okay. Here our strikes actually shifted. It went to 250, 150. Now this is very common sense if you watch Nifty at that point of time. Now there will be I would say logic for this, but let's explain this with a common sense point of view. Here Nifty was going up, right? So if something is going up and if you are shifting your strangle, obviously it will shift up. It might shift down. If I shift down here, then the sold call will actually be in the money rather than out of the money. Anyway, so here we shifted to 250, 150. That is just 50 point above. This was 200 and 100. 200 call, 100 put. This became 250 call, 150 put. Now why have I marked this particular point here at 245? Because at 245 your IVRQ comes out of the high IV zone and it is green, that is it is falling. That is it is coming down and it is not in the IV zone. Here if I watch, this is 1245, this particular place. If I see this particular strangle, we are at 71, our stop loss is 78, 79, whatever. IV signaled a very high regime, then it jumped and came down into a normal regime. So if I sell out here at 71, 72 with a stop loss of around 78, it's just a 6 rupees stop loss. So I sell this particular strangle and for the whole day the strangle continues go down to in the last moment to 59. So basically from around 70 to 59 I got 11 bucks. You might say this is too small, but today the market was like that only. And if you are trading a market with 8 IV on weeklies, these are the movements, these are the points you will get on a non-expiry day. On an expiry day, obviously this will be better, but on a non-expiry day, this is what you can maximum expect. So these were the two trades. Obviously, if you are following this trade, this is a place where we entered a low IV zone. If you want to layer your trade, you could have sold something more at 65, went down to 58, 59, whatever. But these were the two trades today. Extremely boring, like an office job. Trading is supposed to be that boring, not exciting. Because if you are in a job or if you are doing a business, every day morning you don't go to your job or to your business seeking excitement. You seek boredom, you seek work, you seek profits. That's what you do when you are selling options. You seek boredom. You do not seek excitement. I will finish off this video with this. This is the rolling straddle. If you see this, we started off somewhere around here. It was coming down. Quite a few switches took place out here. 25, 200, 150, 200, 250, 200. So a lot of money would have been actually spent on adjustments. So as I said, concentrate on a straddle on the last day, but rest of the day, if you pick up a strangle correctly, those will give you much better trades at much peaceful manner. The major question which I've been facing is how am I picking the strikes of the strangles? This is totally quantitative based upon option Greeks. Just after the demo ends, within the course, I will take a master class. This will be a part of this, obviously. I mean, how weekly options behave, it will be kind of a deep dive, that each day of the week, of each expiry, how each option behaves, how the OTMs behave, in the money behave, ATM behave. That will give you the structure. Then you will get a simple one page kind of, you will get a single page where it will be written basically which day, which option you need to choose to sell, whether in a strangle or in a straddle or whatever. You follow that, you should be absolutely okay. But that's not a black box. I've got to teach that particular methodology, or else it will sound like I am shouting bunkum and you won't be able to believe it and do your trades. So since I'll be teaching some knowledge which cannot be taken back, you will keep this knowledge with you as a lifelong learning. I have kept this within the course and not within the demo. It's not a formula. Okay. So after the demo is over, that will be a masterclass separately, and obviously I am trying to let me see if I can do this for the members of this course for free of cost. I mean, within the course, if you take this course, you can get that masterclass also allotted with it. So that's all for now. Today was Wednesday, so we have the demo for 2 more days, Thursday and Friday. If you have any question, do use the Twitter DM or email me with your questions. Would love to engage and see if you're facing any problems in using this. That's all for today. See you all again tomorrow evening. Tomorrow is expiry, so expect some tweets from me within the day. Thank you.